Welcome back. You're watching Market Cafe on ET now. And now let's go across to my colleague Gaurav, who has the list of brokerage notes for the day today. Gaurav, over to you. Which all brokerage notes are you highlighting today?
Well, yes. First, let's begin with CGDs because UBS has now UBS has actually upgraded the target price for a few. So for IGL, they have not only upgraded the rating to buy, but they have also hiked the target price to 700 rupees per share. While for MGL, they have upgraded the target price to 2,400 rupees. What they believe is that there are inorganic growth opportunities for both these companies. Apart from that, infrastructure expansion is likely to drive the volume growth for the companies, and there are potential M&As which are not factored in the price. When we talk about IGL, they have upgraded on the back of the sustainable growth that we may see for the company. And for MGL, they are expecting strong volumes growth, and that is the reason why they are being bullish on these companies. Other than that, let's also focus on Adani Green because Investec has now initiated with buy rating and a target price of 2,515 rupees. What they believe is that company is going to achieve sustainable growth in the renewable energy. They can actually clock around 5 times growth when it comes to installed capacity, and on back of this we may see PAT growing at a CAGR of around 60% till FY30. Other than that, they also believe that the company has healthy OCF and strategic capital management, which actually negates the risk of equity dilution. And lastly, let's also focus on Bajaj Housing Finance, the newly listed company, because Philip Capital initiated with buy rating and a target price of 210 rupees on this company. They say this company is focusing on the desirable sweet spot for many home aspirants. They actually command almost 65% of the home origination segment which they are operating in. And apart from that, they believe that in 3 years we may see this company clocking the balance sheet of around 2 lakh crores. And when it comes to valuation also, it is trading at 6.5 times, which actually looks attractive for Philip Capital. So definitely watching out on all these companies on the back of the brokerage note that we have received today.
There you have it. So those are the list of counters that make it to brokerage radar this morning. IndusInd Bank and Coforge will also be in focus in today's trading session on the back of its management meet. Then Citi has maintained a buy on IndusInd Bank and a sell on Coforge. So tell us a little more about the rationale behind this as well.
Well, yes, Citi went with the management of a few companies, and let's begin with IndusInd Bank. Now, what bank is saying is that the collection prioritization is going to be there in MFI segment given that the risk is rising. Apart from that, vehicle financing disbursement may pick up because of elections are over now. But when we talk about overall loan growth, now they believe that we may see some lag in the guidance in the near term, at least in terms of loan growth. Other than that, they also believe that there is upward pressure in the deposit cost, and lastly, the company is also growing in the lower yielding segment, which may put some pressure on net interest margins as well. There may be corporate slippages which will be contained, and other than that, when we talk about some position in interest rate, now management believes that the bank is actually favorably positioned when the interest rate cut happens. Other than that, they also believe that the LCR impact is going to be in a high single digit, and on the MD and CEO reappointment, they say that the board will send recommendations before time. And on back of this, now Citi has maintained buy rating with the target price of 2,010 rupees. And other than that, when we talk about Coforge, now the Citi has now maintained sell rating and a target price of 5,885 rupees, because what they say is that the key discussion remained on demand outlook, order book, Signite acquisition and margin trajectory. When we talk about management, now they have reiterated their focus on demand. They say that the demand is bottomed out and now they will see some slow pickup from here on. Apart from that, management was very strong that ex ESOP, the margins will be healthy. In fact, when we talk about Q2, they say that ESOP cost was lower, and that is why we may see some margin accretion happening. And they also reiterated that guidance done in first half of FY25, we may see the margin inclination of around 50 basis points. So definitely watching out on both these companies on the back of the commentary that we have received from the management.
All right, some interesting comments coming in from Citi on IndusInd Bank as well as Coforge. But there are a lot of action as far as CLSA Meet is concerned. CLSA met over 25 investors during their Asia marketing trip over the past 2 weeks, and they found low investor interest in Indian banks, similar to UK as well as US roadshow. Varun joins in with more on this finding and the rationale behind the low sentiment for banks. Varun, over to you. What were the findings?
Definitely. As you said that they have met around 25 investors across Asia, and the feeler that they get is the investor interest in Indian banks is very low. And the main reason for this is what investors say is the EPS growth. Actually, if you look at that, it is very weak, and investor would prefer stocks which have better growth visibility rather than a weak EPS growth. For banks, the base becomes favorable in Q4 FY25 or Q1 FY26, and that is the time when investors would look back at around Indian banks. Most of the investors were unexcited about HDFC Bank, although they preferred IndusInd Bank more because of the underperformance of the stock in the recent past of late, and also they think that the sensitivity to rate cut is more for IndusInd Bank rather than to HDFC Bank. Other than IndusInd Bank, one more company which investors were incrementally confident was Bajaj Finance. So investors are not much confident about Indian banks, but IndusInd Bank and Bajaj Finance, these are the two companies which are there on the radar.
Those are the two companies that make it to their radar, but let's also get to the list of stocks that you should keep on your radar bright and early this morning, and Ria is standing by with that list. Ria?
Yes, good morning. So let's take a look at the stocks that are going to be in focus today. First up, we have SpiceJet, for which the QIP has opened yesterday. Now they are going to raise up to rupees 3,000 crores at a floor price of rupees 64.79 per share, which is a 16.7% discount to the current market price. We're also keeping an eye out on TVS Motors, since they have launched the TVS Apache RR310, which is its flagship offering in the super premium sports motorcycle category. Now they have crafted this from a record-breaking race machine, and this has been launched with segment-leading technologies, and this motorcycle is going to be available in 2 variants and will offer 3 build-to-order customization options as well. We're also keeping an eye out on Torrent Power, since the company has entered into an MOU with the government of Gujarat for the execution of a 5 gigawatt solar wind or solar wind hybrid project at the Dwarka district in Gujarat. Vedanta is also in focus today, since they have issued a clarification saying that there has been no disruption to the aluminum refinery operations after the facility was flooded on Sunday. Let's shift focus though to Edelweiss Financial Services, where a big block deal has happened. So Edelweiss Employees Welfare Trust has sold 27.5 lakh shares at rupees 124, and White Oak Capital Asset Management has bought the same amount of shares at rupees 124. Lastly, the renewable energy stocks are going to be in focus today, since the renewable energy secretary said that we can expect about 5 gigawatt of wind capacity additions in FY25, and we can also expect to commission over 30 gigawatts of solar capacity in FY25. Further, they've also said that they can see tendering of more battery-linked renewable storage projects going forward due to the market demand. And lastly, in FY26, we can expect the renewable energy capacity additions to overtake the FY25 capacity. So definitely keeping an eye out on all of these stocks today.
Right. Thanks very much, Ria, for all the list of stocks that could be buzzing today in trade. Moving on, news coming in on behalf of JK Tyre. Also, JK Tyre has announced a merger with the subsidiary companies Cavendish Industries, and they would merge into the parent company. The aim is to streamline operations and to consolidate all the related business under one listed entity. Let's understand this arrangement also. Now, how would this arrangement turn out to be? Shareholders of Cavendish, they will get 92 shares of JK Tyre for every 100 shares they hold, as well as now this entire merger is subject to approval from NCLT, exchanges and shareholders. Let's not forget that also. So, talking more about the Cavendish, the subsidiary company, it's a key subsidiary of JK Tyre, which produces a large share of JK Tyre's TBR tires, and this was acquired from Birla Tyres way back in 2016. Operations have improved since the acquisition, and they have also ramped up their operations by nearly 5 times post the acquisition. Revenue, which stands at for the fourth quarter FY24, that is nearly 873 crores, and margin stand at 15.6%. Performance was largely impacted by their EPR provisioning.
If you like this video, then like, share and subscribe to ET Now.